All right, everyone, welcome. Welcome to talking about the international equity crowdfunding markets. Wow, what a crowd. Excited to be here. So we've got the biggest portal in Canada and the biggest portal in Australia here with us today. Peter Paul, you've been running Front Funder for 6 years, largest portal in Canada. Matt, you've been running Birchal since you were one of the first to get licensed in 2018 in Australia. You now run over 80% of the volume in Australia. Big numbers, guys. So we're excited to hear what you've got to tell us. So I'd like to kick it off and talk a little bit about the regulatory environment. So any regulators tuning in, earmuffs? I want to hear how, in the time that you've been operating, how the regulatory environment has challenged you or how it's worked with you. Peter Paul, why don't you jump off?
Well, it's definitely, it's been a challenge for sure. Here in Canada, I usually say we're blessed with 13 securities regulators, so we don't have an SEC like in the US. So there've been really fragmented regulation, and so that's definitely been a challenge to launch something new like investment crowdfunding, because we have to deal with all these different kind of rules. So it's only actually since September 2021 that we have nationally harmonized crowdfunding rules in Canada, so sort of the equivalent of Reg CF, where we can now raise up to 1.5 million in a 12 months period. So it's taken quite a while to figure all that out, and for regulators actually to all get on the same page. But the good news is we have it now, and we're going. So yeah, but it was a challenge for sure.
For sure. And Matt, what about in Australia?
Well, we don't have 13 regulators we have to deal with. That sounds like an absolute nightmare. No, we're regulated by ASIC. And look, Australia was a little bit late to the party with crowdfunding. We saw what was happening overseas. I think it was about 2013 when the government issued a discussion paper as to whether Australia should have something similar. But we fared really well after the GFC as an economy. So a lot of the motivation for improving access to capital for early stage startups, the impetus wasn't there. 2017, the legislation was passed, and 2018, the first licenses were issued. There were some pretty fundamental changes to corporate law that needed to happen for us to do what we do. The first is that private companies can have an unlimited number of shareholders now. Previously, they need to go public once they got over 50. And this is a nuance of the Australian regime. Shares have to be issued directly to shareholders, but we've hosted offers for private companies that have literally hundreds or thousands of shareholders. So that's a big game changer. General solicitation, as you call it, like advertising, that's probably the other one for us. We have a really good relationship with the regulator, I'd say. And
that general solicitation, you're allowed to do that in Australia?
Absolutely, yeah. Okay. So there's an advertising warning that needs to appear on any advertisement for we call it crowdsourced funding in Australia, for a crowdsourced funding offer. But general solicitation, it's allowed. We have similar funding limits, so 5 million Australian dollars per company per year, some eligibility thresholds for companies, so they can't have more than 25 mil in revenue or assets. But we had 5 million from day one, pretty much. So like Reg CF, I understand, has only recently been increased, and the industry's growing. We've hosted 180 successful offers on our platform, about 140 mil in funding volume. And this year's been a little bit more challenging. Last year, I think, was really strong. And it's just really exciting to be here and connect with people who are doing similar things around the world.
Yeah, I think those marketing rules are so key, and that's what's created such a robust ecosystem in the US, right? Is that very clear guidance from the regulators on what you can say and what you can't say, and that's what causes these offerings to be successful in the US. Peter Paul, what do you see in Canada?
Yeah, so on the solicitation, basically if you use this so-called startup crowdfunding exemption, which is again an equivalent of Reg CF, you can solicit, you can advertise, but you have to go through a registered funding portal, basically. Okay. Yeah, and as long as you do that, so you can basically advertise, you can promote it, and all investors do need to go through a registered funding portal.
Yeah, okay. And so you two are really like the OGs in this industry, right? Like, so how has your business model changed? Maybe it has, maybe it hasn't. As the regulations change and this industry evolved, are there any key ways you've noticed your business has shifted?
You know, since we now have the startup crowdfunding exemption, it makes it definitely, it's reducing the cost of raising capital for companies because they don't have to go through all the provinces in Canada with different rules and different lawyers, and so it's all makes it way easier. We definitely see through FrontFunder now that about half of the companies are using this new startup crowdfunding exemption, and again for up to 1.55 million. How our platform evolves is because we are operating as a registered funding portal, but also as a so-called exempt market dealer, kind of a broker-dealer light, if you like, enables us to use all prospectus exemptions. So we can use this startup crowdfunding exemption, but we can also use the existing family, friends, business associates, accredited investors, and we can also use the so-called offering memorandum, which is kind of a Reg A light, if you like. So because we can basically combine them, we can truly maximize investor outreach for companies. Because whether you're an accredited investor, you come through the accredited investor exemption, and when you're a retail investor, you come through this startup crowdfunding exemption. So what's exciting to see is that it's all about democratizing investing. It's about combining larger and smaller investors, and on our platform, you really see that happening now. So you see investors investing perhaps $250 to investors investing $250,000. So it's all about creating this inclusive, accessible market, online marketplace, and bringing all these kind of investors together, and that's exciting to see.
Yeah. Matt, what about you?
I mean, look, there was a slight change at the start. So originally it was only public companies that could use the regime, and that lasted for about 6 months, and I think the government realised pretty quickly that they got it wrong. They included some governance exemptions for companies that were crowdfunding, but it wasn't enough. Being a public company just introduced too much complexity for companies at an early stage. So they fixed that pretty quickly and opened it up for proprietary limited companies. Other than that, like, our business model's been pretty similar since the start. Like, we keep it simple. I think the really encouraging thing is the quality of businesses and the stage at which they're coming to us is actually increasing, or improving rather, particularly during COVID. Like, I'm from Melbourne. It was the most locked down city in the world for a couple of years. Like, sometime, we couldn't leave more than 5 kilometers from our house, and we're only allowed out for 2 hours a day. So it's great to be here in Los Angeles now. But a lot of businesses that might not have otherwise considered crowdfunding didn't really have other options available to them. They couldn't go out to events and press the flesh and have coffees with investors. So they turned to us, and it was actually really, really fulfilling work to help these businesses during a really difficult time. But what a lot of founders were telling us was, like, it was a revelation. They didn't realise that their community could help them through these situations. It was only, the usual suspects, the professional investors, which, we don't have as many of those in Australia. So, that's been probably the really inspiring and encouraging thing we've observed.
Yeah, we've seen that too in the US. I think as other parts of the capital markets closed a little bit, we really saw bigger and bigger brands coming to equity crowdfunding and saying, hey, this is something that I think I can try now. And as Peter, Paul, you're talking about the ways we've streamlined it, we make it easier, bring the cost down. More and more of these brands we see entering and growing the space. So that brings me to another point. As equity crowdfunding, we all know the numbers, right? We're doing more and more volume every year. How do the VCs in your jurisdictions feel about this? Are they partnering with you? Is it, a sidecar round on a VC round, or are they kind of poo-pooing it a little?
So in Canada, definitely in the beginning, what you just said, they sort of, I'd say, dismissed equity crowdfunding. So look, what is this? Like, the crowd's investing, this is a bad idea. And what's exciting to see is we're now for 5 years down the road is that you definitely see that change. So you see, I think the traditional investors sort of realize like, hey, this is not some sort of hype, and will go away. It's here to stay.
Yeah.
And it's getting bigger.
Yeah.
And I think they also recognize now, and that's of course the whole exciting thing about raising from the public for companies, is that obviously it's about raising money, but it's also about creating awareness and mobilizing your community. And I think that traditional investors start to recognize that and say, hey, if you're having a CPG or an impact investing or a product or service where it makes a lot of sense to create awareness around it, and the more the better, why not? So also in Canada, and if you look at the UK, where of course this investment crowdfunding has been around since 2010, there you actually see that the majority of the deals are sort of co-invested by traditional investors. It's really exciting to see, and we see the same now happening in Canada, that traditional investors come to us now, say, actually, we're looking at this deal. Why don't we co-list it on FrontFunder and open it up and get a whole bunch of retail investors in? So it's a great opportunity. I think that's what the traditional investors start to recognize. It's a combined funding and marketing exercise for companies. And so
they're starting to understand the power of that and how that benefits the company.
Totally. And it's also not competing, right? This is not like, okay, we're going to displace traditional investors. That's not going to happen anytime soon. It doesn't need to happen. The whole idea is that this is complementary.
Yeah.
Right? Like let's bring those different sources of capital together, and that's what we now see happening, which is a great validation of what we're doing.
Yeah. What about Matt in Australia?
Yeah, look, I mean, I completely agree. I see crowdfunding as complementary to other types of funding. I mean, the way that we describe what we do to founders is, for the first time, they're able to unlock equity capital. Australia doesn't have, we've got a venture capital industry and professional investors, but certainly not, to the degree and sophistication that other markets like the States do.
Yeah.
So the need for early stage businesses, I would say, has been far greater in Australia.
Yeah.
And as a result, founders have been really quick to take it up because they've seen the benefits.
Interesting. So it's filling a gap that isn't otherwise filled there.
Yes, absolutely. I mean, there are early stage investors. There's just not enough of them.
Yeah, but I think that's true everywhere.
Yeah,
I think that's why equity crowdfunding is so great.
Yeah.
So often we sort of speak about the funding gap.
Yep.
So you put some money in your own company, maybe with some from family and friends. You're clearly pre-VC, so you're sort of in a range of $500,000, $2 million. So where do you go, right? So that's really where an investment crowdfunding can fill a gap, right?
Yeah.
And help you raise that capital.
Yeah.
I think it's this fear of the unknown among investors as well, because companies that fund through our platform, they look different to businesses that professional investors and VCs typically invest in.
Yeah.
But it takes time, and we've been fortunate that we've had some pretty visionary founders that have been on our platform, that have had VCs that have maybe not been as supportive as they could have been or should have been, but to be involved in the deal, they've supported the founder. The founder has said, no, this is important to me.
Yeah.
I want my community to be involved, and if you want in on this deal, this is what we're doing. And there's many examples of this, and hopefully there'll be many more. And VCs are investing post a raise now as well, which is great. These points of validation that are busting a lot of these myths that are out there about equity crowdfunding.
Yeah, and let's talk about your founders for a second, because they're a really interesting group, right?
Yeah. I mean, we didn't set out to build a purposeful platform.
Yeah.
But that's kind of what we've become, and it's really nice. Our first successful offer was for a company called Park, which has a really nice buy one, give one model for soccer balls. Sam, the founder, wants to change the world through the beautiful game. And I think that success showed other, purposeful and impactful founders, what opportunities there are to achieve success with crowdfunding by building a community of supporters that will support you with capital, but also support your business. The biggest raise that we've done on the platform was for a company called Zero Co, and they're on a mission to untrash the planet by eliminating single-use plastic around the home. $5 million the first company to raise $5 million. They did it in 7 hours on our platform.
Wow.
Yeah, amazing. And
How did they do that?
that 45,000 passionate customers. You know, when you think about what they're getting their customers to do, like they're committing to change how they operate their homes. So they're really passionate and evangelical customers.
Yeah.
And I mean, Mike says that they broke the internet and they broke our platform. They didn't quite break our platform, but we had to, you know, put a bit of a waiting room scenario in there because we were just, you know, there was so many people that were trying to invest. But the amazing point of validation was that $6 million was also raised outside of our platform because we'd hit the statutory max from SquarePeg, which is one of the leading VCs in the country.
Oh, cool.
On substantially the same terms as retail investors. So it's just one of these really high profile, you know, validators of what we're doing and how this can be, you know, a really positive thing for founders.
Yeah, we're seeing that in the U.S. as well with the venture lab studios. Like, still some VCs are like, I don't understand the model, but there's a lot of the new ones that are saying, wow, like this is really beneficial for the companies. We can see how it increases the community who are buying the product or waving the flag, validating the company. This is a pretty cool thing.
Yeah. Community rounds. You know, I've been having chats with Johnny from WeFunder, and I love that term. It's great.
Yeah. So, you guys being the biggest portals in your respective countries have seen the largest offerings there. What makes a successful offering? I mean, so you talked about that one. There was a passionate group, a cause that they could really get behind. We've seen that too, impact investing. People believe in the company, it makes a difference. Anything else, Peter, Paul, that you've seen?
You know, it's one of the key success factors is you know, when you choose to raise from the crowds, you are as the founder, you're ultimately the storyteller, right? So platforms like ours, and I'm sure it's sort of similar for you guys, is that, you know, you facilitate that, you can amplify that message, and you can help these founders to mobilize their existing communities and jointly reach out to new communities. So first off, to your point, indeed CPG companies, certainly if it's, you know, if they're coming up with health products, impact investing, as you mentioned, that's what people care about. That's what they like to see succeed. And then what we offer is literally an opportunity to, you know, vote with your investment dollars, right? So it started with having that sort of typically a product or service that's easy to understand, resonates from the general public. Secondly, have an existing community for these companies that they can mobilize. Perhaps they already have, you know, thousands of followers or customers, you know. So how about turning those customers into, you know, owners of the company as well. So those are companies that we experience are the most successful. And then it is basically from start to finish of the campaign. It's like it's hard work, right? You support your campaign. You come with updates. Because you always have investors that watch the video and say, I'm sold. I mean, right? And others say like, interesting. Let's follow. Let's see, and then they start engaging and following updates, and they say, okay, now I'm going to jump to and get in. So it's, and I think it's a reflection of where the industry now is. Like, you know, as it matures more, and we'll probably see more and more different kind of companies, perhaps even more let's say complex enterprise software companies, perhaps, you know, as people get more sort of familiar with the concept. I know that in the UK, where it's the same thing, it started with sort of the low-hanging fruit companies, and now you see all sorts of companies really raising through these platforms.
That's interesting what you mentioned, the investor starts to follow it. How long are these offerings typically open for?
Right, so it's here in Canada, it depends on also the rules used. Typically, you know, you can, if you want, you can use the startup crowdfunding exemption, you can raise up to 3 months. But generally, you want to kind of get it done as quickly as possible. You just manage a couple hours, like awesome. You know, that's great. But from a regular perspective, you can run it for 3 months. We on FrontFunder see on average, you know, anywhere from a month to indeed that sort of 3 months. There are also some issuers that capital raise that take longer, but you know, average is around the 3 months.
Oh, interesting. That's quick. How about you?
Yeah. We have a 9 to 12 week process, and we're like pretty, you know, what I'd say to founders is like capital raising is the same. Like we've, you know, applied first principles to how we've built out our platform, systems, processes, and momentum and scarcity are like the two key tools to get a deal done. And our whole process is designed to just move through things quickly. But that is challenging because when you think about, and this is why community and existing audience is really important, because if people already know about you, then it's easier to kind of build that trust and move them to, I mean, how much closer can you get to a company than being invested in and holding their stock? But if not, like, our process is designed to kind of move these people from not knowing about the company to, you know, having hyper trust in the company and investing in them in a really short period of time, which just means that they need to be super organized, but really crisp with their story. And I think that's the key, right? Is it's not about, you know, B2C or a certain industry vertical. It's, you've got to have a story to tell. Like, the unique thing about this sort of fundraising is you can access a huge audience. So if you want to do this, how are you going to engage that audience? And it's, I would say, having a really crisp story.
Right.
Okay, so in the US, sometimes we do testing the water. So you're talking to the audience before it goes live. Are you guys doing that?
That's actually, it's interesting you asking that, because we just yesterday launched what we call coming soon feature.
Yeah.
And it's exactly doing that. So and so what it does, it's indeed helps companies to test the water, you know, see what's the interest there, how crisp is the story, does it resonate, right? Does it, you basically get followers and people interested, and it's also a great way to you know, to test the waters before we also take the company further, because on FrontFunder each company goes through a screening, so it's essentially curated marketplace. So it's a great way to test the waters, see how it flies, and then say, okay, yes, this is, you know, this has got good traction, and then we basically take them through the process and get them ready for a raise. So and I know a similar thing is in the US with, it's literally called test the waters, right? Like it's a great,
but in the US, like a Reg CF portal, we would keep open longer than that. Like, that seems incredibly quick to me, as you said. Like, investors, some of them want to follow the company a little bit and, like, you know, move down the funnel. So that's interesting.
Yeah, we have. So we've got an expression of interest campaign that's like baked into our platform. So, and we've had this since day one, and it's, I mean, that 9 to 12 week process allows like 2 to 3 weeks for preparation and setting up, getting your video right, then 2 to 3 weeks for an expression of interest campaign, and then in quick succession, the offer itself. Now, sometimes it can be, like in Zeroco's case, you know, 7 hours, right? So that the offer period was over in 7 hours. But that expression of interest campaign, people aren't investing money. They're just saying, yes, I'm interested in this offer. And that's really the time for storytelling is, you know, pulling everyone in, and, you know, having a big launch day is like really important. It's momentum. It shows people that, you know, hey, this is exciting, you know, I'm excited to be involved.
Yeah, and like, I love that because it's a perfect example of how having technology allows you to do something that you can't easily do without technology, right? Like, going out there and getting all those, how many expression of interest would there have been for that raise? Thousands, right? So you can't go around to get thousands of expressions of interest when you're not even taking the money yet, and then go back and take the money without having technology. That's the reason that I got into this business in the first place. And I love, because seeing the paper-based approach was just so cumbersome to me. So are there any examples or thoughts for you guys on, you know, you're both building technology, on how the technology is changing this space and changing the way things happen?
Well, Rebecca, I think, you know, you just mentioned it, like the fact that you leverage technology and you can therefore easily reach out to anyone, and you make it accessible. You make it, you know, you can transact fully online, like, you know, on the FrontFunder platform. If you want, you should take a bit more time to inform yourself, but you could complete investment start to finish as a first-time investor in as little as 12 minutes.
Wow.
The fact that you're, you know, everything's digitized from onboarding to transfer funds, signing subscription documentation, all that. Yeah, I mean, that's just a game changer. And that enables companies now to reach out to people that they otherwise couldn't approach, right? I mean, you're not going to sit down or pitch for individually for a $500 investment, but now you can reach out through the online stages that we offer to broadcast to literally anyone. Right?
Yeah.
And I think that's just really exciting to see. We've seen it in other industries as well, where you see the same thing. Like you create online marketplace, you make it accessible, you make it transparent, instant, and yeah. And I think that's where we are with investment crowdfunding. Like it's we see on our platform investors between in N20s to sort of 40s, 45. That's where we see a lot of activities, and you see these investors now start creating portfolios, right?
Yeah.
So perhaps they came from a particular company on FrontFunner, and now they say, okay, I'm going to start following other raises, and they start creating portfolios, making multiple investments, and that's really awesome to see.
This is so cool.
Yeah, I mean, we're really focused now on like post-raise. We've observed like some companies do this really well. Like they appreciate that I've got capital, but now I've got this community of supporters, and it really is a matter of like getting out what you put in. And like Seabin Project, it's a company that we've funded. They're actually operating here in LA. They clean up, pollution from the waters with a bin that I think you call them, trash cans, but like trash can that sits in the water, collects waste plastic. It's a content machine, right? Like they're out there doing good in the world, and people are excited to be involved in this business, not just for the financial return, but they want to see what these guys are working on. Not every company is as good as the Seabin Project in telling their story. More often than not, it's because they don't have the tools available to do it. So that's what we're really focusing on as a platform, because about 15% of the companies that we fund actually come back for a follow-on raise. Average uplift in value of about 140%. So like it's great. Like they're coming back, executing their plans, and raising more capital. It'll be easier for them to do that if they keep their investors engaged. And that's what we're focused on, in just building out tech to just make this really easy for companies to do this.
I love that. I mean, we're doing that too. I love it when people in totally different countries are thinking about something the same way. I think that's so cool. Yeah. So I know we only have like 2 minutes left. Really quickly, NFT markets were up, they're down. Crypto is all over the place. Now crypto exchanges are blowing up. What do you think the future holds for this market over the course of the next 5 years?
Well, actually, when we had a chat, it's interesting to see how you see the similar developments across the globe now, right? And Matt, you mentioned about impact investing companies, companies that really want to change the world, right? And more so, we know how important it is, and so companies that have those ambitions and now can raise money from everyone, that is the future. And it's an empowerment of the public to drive change, positive change, and to do that with investment dollars, right? And to also therefore gain the upside. So we're onto something big here. It's really exciting that it's becoming open, democratized. In Canada, we're gaining momentum. I'd say it's still an industry in its infancy, but it's really gaining speed, and that's really exciting to see. So in 5 years' time, just like we see the public investing in the online public markets, which are perhaps not as exciting right now as they used to be, and I think we're seeing a similar thing certainly within 5 years in the private markets. It's a whole new asset class being unlocked to the public, and that's where we're going.
Love it. Matt?
Yeah, look, I completely agree. This is the first time that early stage businesses have been offered as an asset class at scale. And any asset class needs, an ecosystem, a suite of products and services. Primary capital, we've got a really compelling solution for that. Secondary trading is something that really needs to be worked on. It's going to be tricky, a lot of securities regulation, but we can find a way through it. That investor relations piece is really important. And then infrastructure, just making all of these things as frictionless as possible. But if we nail it, then, and without getting too emotional and soppy, we can change the world, because these businesses are raising capital in a different way. They're, building a social contract with their communities, and they will be held to account for that. But the businesses that are going to be the big businesses of tomorrow will be different to the big businesses of today. So I get really inspired by, when I think about the future, and I'm with Paul. Like, I think we're only scratching the surface, and as people start to look to alternative assets like crowdfunding, hopefully one day it's mainstream. This is just how things are done, and people out there doing cool things and telling cool stories.
I love it. I love it. I agree. We're only in the second inning here, and there's so much to go forward with. Thank you both for your time today. This was incredibly enlightening. Always a pleasure.
Thank you.
Thank you.
Thank you.